Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Hirul Dadia. Clearly, if you see the markets are under pressure as we speak, we're below the 18,600 levels in terms of Nifty 50, and the advanced decline ratio is also pretty much in favor of the bears. We opened around 18,655. So again, from open and close basis, we've already missed the 18,700 level, and we've hit a low of 18,555. Now, where from here on is going to be interesting to watch out for, because it seems there is going to be some more pressure. That's what analysts are indicating, at least in the short term. But overlying, the underlying tone overall is still with some bit of positivity. Joining us on the show today to discuss more, we have Aamar Singh, Head Advisory at Angel One. Amar, good morning, good afternoon, and welcome to the show.
Thank you for having me.
Always a pleasure. Amar, my first question coming to you is overall, if you see yesterday's session as well, we ended in the negative. Today's session, if you see, we've seen profit booking that has started to come in already. Cuts of around 3/10 to 4/10% is what we're looking at in terms of closing basis as well. What's the sense that you pick up?
I would say that overall, the way the markets have rallied, so this was along expected lines, because if you look at the all-time highs of Nifty, that's still to be breached, whereas we've seen that being breached by the Bank Nifty and the Fin Nifty. So clearly shows that it was primarily a major chunk of the rally support was coming in from the financials, which is now not the case. So we are seeing some sort of profit booking happening in Nifty. And also, if you look at the open interest data, we've seen some short build-up happening over the last couple of days, so we'll have to watch out for that. And these being record levels, so this was along anticipated lines that there would be some profit booking coming, because Nifty, if you recall, 18,887 is the all-time high of Nifty. So it was very close, I would say, touching distance around that, almost 100 points below. We saw that high being made yesterday. So I would say, and technically, if you look at the charts, clearly shows that there is some sort of fatigue, but still, from an intermediate term perspective and from a long term perspective, the bias is in favor of the bulls. But being the market is at in the overbought zone across time frames, so be it the weekly charts or the monthly charts or the daily charts, so clearly that shows that they could meet with some profit booking or some upside resistance. As far as now support is concerned, Nifty's got very crucial and important support coming around the 18,250, 18,350 zone. So that should act as a very strong support zone until the time we don't see Nifty sustaining all the 18,700, 750 consistently. I would say that we are in for some choppy trading sessions.
Right, so choppy trading sessions that could be on the cards, as Amar is mentioning. Amar, but overall, if you see in terms of the wicks, right, that is slightly still indicating some positivity. If you see in terms of the PCROI as well, that has cooled off. Uh, Clearly, it seems it's pretty much comfortable for the bulls as well, right? And if you talk
So
about, yeah, and just the last 2 points I want to mention is the overall FI activity, the FI long short ratio. Uh, that's around 0.93. That's the number that we've been tracking so far. Uh, these 3 points, what are they pointing out from a trend perspective?
as you see, as you rightly said, the India VIX is at very comfortable levels. So in spite of the market touching record highs, we're not seeing some major, I would say, negative movement on the India VIX. That's around 11. So that's fairly good, because till the time we don't see it trading above the 14, 15 mark on a consistent basis, I would say it's all fine. And on the downside, we are seeing it trade around 9.5, 10, and that's a level. So that's one positive aspect. As far as the other data which you talked about, the long short ratio clearly shows that overall what the markets are currently factoring in is that there's not too much of negative news, and also we've seen that crude oil prices are also somewhere now within the $70 band, $70-$75 band. So that's also one positive aspect. Also, we've seen that the rate pause is there, and there are anticipations there wouldn't be a rate cut in the near future, but at least a rate pause would be there. So these things are somewhat positive for the markets. I wouldn't say they are negative. So that's what is sustaining the markets. But we'll have to watch out for how we see the build-up going forward, because that's going to play an important role. And as I said, these are the technical levels, because if you look at technically, the markets clearly show, I'm talking about the Nifty or the Bank Nifty, they clearly show that from a short-term perspective, there is fatigue now setting in the markets. So that effectively means is that more or less the balance of power is now evenly poised in favor of the bulls versus the bears, though the overall uptrend remains intact. So that till the time we don't see Nifty closing below the 18,200 mark consistently and trading below that level, then we could post that we could say that yeah, a short-term top has been formed. Otherwise, more or less, you have to go with the trend, and the trend is still in favor of the bulls. But on the short-term perspective, it's more or less evenly poised, because some of the technical indicators point that higher levels would be met with selling pressure. As far as if you look at Bank Nifty again is in a very narrow range. So it's going to be, I would say, 43,700, 800 on the downside, 44,400, 500 on the upside. That's the range, because on the daily charts, Bank Nifty is clearly showing, and even Fin Nifty for that matter, that it's a range play.
Right. So that's with regards to both the indices. Now, apart from that, let's look at a little bit of stock specific action, right? Let's see at Tech Mahindra as well as IEX. We've seen aggressive selling, aggression pretty much on the selling side on both these counters. It's continued with IEX in today's session as well. What is the derivative data and the chart suggesting?
Yeah, I would say if we look at Tech Mahindra, so Tech Mahindra clearly shows that the stock, see what happened in this particular stock, Tech Mahindra, it rallied from almost 980 levels in the last week of April towards 1140, 1150. But overall, if you look at most of the IT stocks, and particularly I talk about Tech Mahindra, on the long-term charts, it's not displaying too much of confidence, because till the time we don't see the stock trading consistently above the 1150, 1160 mark, I would say it's more of a range play. However, on the downside, the stock has got strong support coming at around the 1000 mark. Talking about the other stock which you mentioned, Indian Energy Exchange, that's been, I would say, that's really sold off very sharply over the last few trading sessions from almost 170 odd levels. Currently, it's around 122. So here also, it has a similar pattern with regard to Tech Mahindra on the monthly chart. So what I mean by that is that the monthly charts are I would say they have a negative bearing. So that clearly shows that upside will be capped, and that's what we are seeing in Indian Energy Exchange also. And Indian Energy Exchange has recently breached its low, and so now if you look at it, it's got very strong support coming at around 115, 116 mark, but more or less the biasness is in favor of the bears. But since the stock has corrected very sharply by almost 30%, more than 30%, you could see some pullback in the stock, but the trend remains negative.
Right, so the trend remains negative on that one. Moving on, let's pick up a few of the other names as well, that have been in focus. Clearly, if you see names like an HUL, that has been trading under pressure in today's session as well. What's your view?
HUL, if you look at HUL, what we are seeing is that HUL overall, again, on the long-term charts, now it's showing fatigue. So clearly shows that upside is going to meet with resistance, because if you look at the stock from almost 2400 levels, it's currently on 2638 levels or so. And if we go back in time and look at the stock, so what we see is that the stock had made a high of 2729, and then again around the same way 2740 in December. And recent high was also around 2738. So effectively, it means that it has got very strong resistance coming around the 2740, 2750 zone. So that's going to act as a zone of resistance, and profit booking would happen at those levels. Coming back on the downside, the stock has got some very good support coming at around the 2500 mark, 25, 25, 20, 20 mark. But the long-term charts now clearly shows that the stock is in, for any major rally, the stock would really have to sustain above the 2740, 2750 level. Otherwise, it could be capped now on the upside and more of a range play on the downside. As I mentioned, 2500, 2520 is the immediate level of support. Crucial support for the stock is around 2400 levels. But
Right.
I don't see any major upside in the short term.
Right. Amar, how about HDFC, AMC as well as Tata Steel? Because both of these counters are seeing a lot of bearish positions being added as well. What's your view?
Yeah, looking at HDFC, AMC, what we are seeing here is that see HDFC, AMC has bounced back to almost 1600 levels. Currently, it's around 1900 odd. But if we go and look at the long-term charts, so the long-term charts clearly tells that on the upside, the stock has got some sort of resistance around the 2100 mark. But the stock, for any meaningful further rally, it needs to sustain above the 1850, 1900 mark. So that's going to act as a zone of resistance on the downside. The stock has got support around 1800, 1850. On the upside, it's around 1940, 1950. That's an immediate zone of resistance. But it seems that the worst is over for the stock, because what we are seeing is we are seeing some sort of bullish divergence on the long-term charts. So that clearly tells that the downside seems to be capped, but upside for any meaningful rally of say 10, 15%, the stock needs to sustain above the 1950, 2000 mark. Now, talking about the other counter which you mentioned, Tata Steel. Again, Tata Steel is going nowhere in the short term or the medium term. It's a range play completely, because the long term charts are not very positive. So I would say that if you ask me, on the upside it's 120, on the downside it's somewhere around 100. So that's a range that Tata Steel could be a very good play on. So that's a range one should look at, because the monthly charts clearly point, and even the weekly charts, they show that there is a lack of bullish momentum, and it's more of a neutral play in Tata Steel.
That's a neutral play coming in there. How are you looking at the cement pack? Because positive positions we are seeing on India Cement, Ultratech, Ramco, as well as JK. Some long trades seen on these names. What should the strategy be, Amar?
Yeah, looking at cement stocks, what we've seen is that if you look at ACC, we've seen some pullback happening there, but then again, it's not very confident in that sense. Looking at Ultratech, it's here the charts are completely different when we compare it with ACC. So Ultratech is very strong on the long-term charts. I'm talking about the monthly, the quarterly, even the weekly charts are clearly displaying that there is bullish momentum. Short-term charts also, we've seen some significant volumes. So the volumes have been significant recently, and almost we've seen 894 crores happening on 31st May. So that's far above the average volumes, and post that, and that was around the level of 7,900. So the stock is up by almost 200 points, 250 points from there. So this is one stock which continues to remain positive. Looking at the other stocks, if we talk about India Cement, India Cement also is strong on the charts. So overall we are seeing some positive movement on the cement stocks, and the momentum continues. But for India Cement, the stock needs to sustain above the 240 to 45 mark for any rally towards 270 to 280 levels.
Right, so that's with regards to where cement players go. Overall, my last question coming to you, Amar, is if you have to look at June expiry, now clearly the underlying tone there is positivity. What levels are you tracking from an expiry perspective? I know it's too early, but what are charts currently indicating both for Nifty as well as Bank Nifty according to you?
Yeah, I would say that if you ask for Nifty, the best part is the intermediate term trend is very strong. So that's one positive aspect. So effectively, it means that if there is a correction, we'll see a pullback. So now the key question is, what are the crucial zone of support? So as I mentioned, 18,250, 18,350, that's going to act as a very strong zone of support for Nifty, and we could see a pullback from there. But again, on the upside, we need to sustain above the 18,750 mark consistently. Then we could see an all-time high in Nifty. Nifty reaches and sustains above the 18,770. Talking about Bank Nifty, again, Bank Nifty, what I see is that the daily charts clearly point that it would be in for some consolidation. And there we could see some dip. So the dip could be, if it reaches the 43,700 mark, it could trade as low as 43,300 levels. On the upside, immediate zone, I would say 44,500, 600. That's a zone of resistance for Bank Nifty. But as I said, the bias is in favor of the bulls. But at the same time, you need to remember one thing is that Nifty on the monthly charts is still displaying some sort of, I would say, neutral with a slight positive bias. The intermediate trend that is on the weekly charts, that's very strong. And the short-term trend is more or less, as I talked about, it's more or less fatigue. So it's going to be a range play. And these are the levels that one can look at. And as long as we don't see India VIX moving higher, I don't see much cause of concern.
It's not much cause of concern so far, but clearly, if you see today's session, at least there has been pressure. But overall, on a weekly perspective, clearly gains of around 0.7% is what we've seen in terms of Nifty as well as Sensex. And the broader market, especially the mid cap index, has outperformed the benchmark indices, though the small cap index has lost little over 3% during the week. Thank you, Amar, so much for joining us on the show and giving us those numbers as well in terms of what we should be watching out for clearly. So, as we were mentioning right now, most of the major sectors have also lost on a week on week basis, and it's mainly the power, auto, real estate, utilities, FMCG, and IT. These are the ones which have lost the most, whereas oil and gas, telecom, and pharma are the ones who've gained during the week. In terms of stocks, if you see Britannia, JSW, Tata Motors, these have been the weekly top gainers, while Tech Mahindra, Kotak Mahindra Bank, TCS have been the top losers for the week as well. And the FIs and DIIs have continued to remain buyers as well. And on one of the key macro impact on the economy front, we had the RBI MPC, which actually voted unanimously to hold the repo rate at 6.5% while remaining focused on the withdrawal of accommodation. So clearly, this is how the week has gone by. Overall, yes, there is positivity, but the last two trading sessions have been slightly on the lower end. And whether we will be able to play that catch up rally to see new heights is going to be interesting, but the stretch is just going longer and longer. That's all that we have on this session. Wishing you all a happy weekend, but lots more lined up on the other side as well. So do stay tuned to BQ Prime.